It's Monday, November 8th, 2021. A lot to talk about today, ladies and gentlemen. So much happening. Markets across the board up. We are seeing record after record. We're continuing to watch the melt up continue. And I don't know about you. I know there's a lot of people out there very ecstatic, euphoric with everything that's happening. I see quite the opposite here. This is so far off the rails. These markets are so far off the rails. This melt up is getting so far out of control. I see danger. I see serious problems coming from this melt up. And I know that there's a lot of arrogance out there where people believe that nothing bad can happen. There's no risk in these markets. The Fed will ride in on their white horse and bail everybody out. There's nothing to worry about. All we can do is make money from here on out. There will never be a correction. There will never be a collapse. Pure ignorance and arrogance taking place. And these are going to be the most unprepared people when these markets correct, when these markets crash, and they are going to. And I know there's a lot of people out there going to say I'm negative, I'm being pessimistic. Look, you can believe what you want to believe. If you believe this whole thing is going to be rainbows and teddy bears for the next 10 years, God bless you. I see these markets and this economy on borrowed time. And this is why I make these videos. This is why I personally prepare. This is why I personally don't gamble right now. I want to share some articles with you, and maybe you can explain to me why these markets are up when I look at data that tells me fundamentally things are very wrong here. This first article, holiday shoppers plan to spend up to $276 per family member on average this season. This comes from CNBC. Average parent with kids under 18 will spend $276 per family member. They did a survey. 48% of the people surveyed said they will spend around the same as they did last year. 21% intend to spend less. 13% said they will spend more, and 9% said they're not sure. Now, I pulled up an article off of Reddit, and this is from 2 years ago. And it's titled 50 million Americans are still paying for last Christmas. They're still paying those credit card payments for last Christmas. This coming from 2 years ago. I can't even imagine what this number looks like today. But let me repeat this. 50 million Americans are still paying for last Christmas. That was on Reddit. And I want to share a quick story with you. I went to an ATM yesterday evening. And as most of you know, I don't keep much money in the bank. I had some checks that cleared, and I just wanted to pull it out. And I pulled up this receipt that was laying down right on the ATM. And this is from a Chase bank. And I looked at it out of curiosity, and it said that a withdraw for $20, a withdraw for $20 denied. This person right here could not get $20 out of their bank. And I'm reading things like this, that people are going to continue to spend money this holiday season. Many will, and many will not. But what is happening in this economy when somebody can't even get $20 because they don't have $20 in their checking account? That is scary. Look, I feel for people like this, okay? You're in a tough place when you don't even have $20 in your checking account. But markets across the board are up, record all-time highs. The melt-up continues. The euphoria continues. Now we're talking about how much money everybody's going to spend on Christmas when we can't even ship plastic cups and straws around this country. It's just crazy. Administration targets another U.S. pipeline for shutdown after begging Saudis for more oil. Gas prices, ladies and gentlemen, are going up. Administration exploring the idea of shutting down the Line 5 pipeline, which links Superior, Wisconsin to Sarnia, Ontario. This would cost tens of thousands of jobs right here in America, billions of dollars in economic activity, and further exacerbate energy shortage and price increases. Who is this going to affect the most? It's going to affect the middle class and it's going to affect the poor. That's who it's going to affect the most, not the top 10%. It's going to affect the other 90%. Axios. Used car market gets even more bizarre. I mean, everything we're watching from day to day becomes more and more bizarre. Used car prices jumped 9.2% in just the last month, 38% higher from a year ago. Somebody please explain to me how people are making it out there. How are people keeping their heads above water? Look, I don't get it. I really don't. Please comment down below. Let me know what you think. Here's another one. Got milk? Cow juice prices are soaring amid higher feed costs and smaller herds. This on The Hedge today. Again, it's not an issue for the top 10% of Americans, but it is an issue for 90% of Americans. But this affects the middle class. It affects the poor. It's affecting people with kids. Milk is up 26%. We go back to July 2018, it was $2.84. Now it's around $3. I think they said $3.64. So almost up $1 since July of 2018. How about this one? This is on the Wall Street Journal today. Consumers trade ribeye for ground beef as grocery prices rise. Ribeye steak is up 40% from a year ago. Insane. I went to the grocery store last night to get a steak, and I cannot believe how much less selection there is than a year ago. They are definitely not putting as much meat out there, and they're putting a lot more cheaper meats out there. It's hard to find a T-bone or a porterhouse, very limited, and the prices. I saw filet mignon last night for $35 a pound. I don't know. I don't know who's doing it. Unbelievable. Retailers said that they are servicing larger amounts of cheap meat products as they anticipate consumers will seek bargains. I haven't seen from a couple of the grocery stores that I go to. I haven't even seen meat on sale for months. I can't even remember the last time I saw a steak sale. More ground beef is selling, and fewer middle meat cuts such as strip steak and ribeye are being sold as everyone is trying to find something that fits within their wallet, said Carrie Otwell, Director of Meat and Seafood at Mitchell Grocery Corp. So people are buying hamburger, they're cutting out steak, plain and simple. And if you have kids, this has got to be a very, very difficult time for families. When I go out and get something to eat, and I just think, wow, I mean, if you're just at a decent little diner and a family of four there, I mean, that could be nearly $100 just to go out to a diner today. It's getting tough. And where's the breaking point? Fuel prices, energy, to cool your house, heat your house, put gas in your car, food, everything continues to go up. And where's the breaking point where people just can no longer do it? I mean, people are cutting out everything they can right now. Many people now are dependent on their credit cards to pay for essentials, to pay for that hamburger, to pay for the rent. They're now reliant on credit cards. Interesting article today coming from the New York Post. Supply chain stalled by 72,000 truckers who failed strict drug tests. Testing positive for marijuana, opioids, methamphetamine, amphetamine. So this is another problem as we keep hearing this continuous report of the shortage of truck drivers. Well, now we have such a drug problem in America. Apparently no shortage of drugs, but 72,000 truckers failed drug tests last year in this country. And I think that they're saying that number this year is going to be over 80,000 for 2021. So, I mean, it's unbelievable the problems we have here, the dependencies that people have, and the shortages will continue across the board. Walmart is using fully driverless trucks to ramp up its online grocery business. This comes from CNBC today. And I mention this because this is going to be a continued problem here with technology and robotics replacing jobs. So, you know, we see businesses having a hard time hiring people. We look at the problem in trucking. Walmart is now doing everything it can to cut out the cashiers at their stores. And soon, one day, not right now, but somewhere down the road, they're going to be using fully driverless trucks to deliver products at Walmart. And that means we're going to need less human beings in the workforce. So as we have millions of people from all over the world coming to America that are going to need work, and we have Americans right now who need to be working, and many who are not working for whatever reason, we're still losing nearly 300,000 jobs a week. What happens as we continue to see warehouses replacing humans with technology? And what's going to happen when we don't need truck drivers? What's going to happen when the food industry doesn't need anybody to take an order because they have a robot to do it, they have a computer to do it? This is where it's all heading. And so I think it's a really important time right now to make sure that you have a skill set, that you have a trade that is going to be beneficial down the road. Pepsi CEO says he expects delivery of first Tesla semis this quarter. Again, where does this all go for Pepsi? It's going to be electric trucks, but you know at some point there'll be driverless electric trucks. So careful when you think about a career that you're getting into right now. Is it going to be viable 5 or 10 years from now? I want to share one last article with all of you today. This comes from wolfstreet.com. It's titled, "What's Happening with the Massive Delinquencies of FHA, High Risk, and Subprime Mortgages Now That Foreclosure Bans Ended?" And I want to share this with you as the markets continue to melt up, as everybody on the television is telling you and I to jump in and buy a home today, run up our debt, our credit. Don't worry about risk. Don't worry about collapses, corrections, buy a house. And how in the world can these markets continue to just go straight up with everything I'm sharing with you concerning this data today? This doesn't make sense. Something is not adding up here. The FHA, a government agency that insures 7.5 million high-risk, low down payment mortgages, including subprime mortgages, has been at the core of the pileup of delinquent mortgages during the period of the foreclosure moratorium and forbearance when borrowers didn't have to make mortgage payments. Among FHA insured mortgages, serious delinquencies, this is 90 days plus, by the end of September, hit 8.5% of FHA mortgages, or 632,000. 632,000 homes, ladies and gentlemen, were seriously delinquent, far higher than before the health crisis. The rate of delinquency before the health crisis was 4%. Now it's 8.5%. Half of all serious delinquent mortgages were FHA, though FHA mortgages account for only 17% of all mortgages. What about people that we're not hearing about that are 30, 60 days delinquent? We're not hearing about those yet, but we are going to hear about them. What about non-FHA loans? Over 40% of refis this year are cash out refis, meaning people just took money out of their homes like an ATM. So why are they doing that? Because they need to pay bills. They need to make the car payments. They need to put some cash away. Or maybe they're anticipating that they're going to default on their home and they're going to get cash out of that home before they default. So it could be an avenue of things, but how dangerous when you think about over 40% of refis were cash outs, just pulling money out of those ATMs, ladies and gentlemen. This is so similar to what we saw back before the 2008 crash, but we are in such deep water, a place we've never been to. There were some very interesting comments in that wolfstreet.com article I just read to you. or paraphrased. I want to share a couple of these comments. I'll paraphrase through these couple of them. Let me know what you think. One comment said this: North Idaho, newly reduced price signs are popping up on existing for sale signs. Here's another one. Austin, Texas, real estate down 13% in September. Median price went down from $560,000 to $510,000. Now, I want to ask all of you this. What if we see a massive wave of selling to cover foreclosures and Zillow's overbought houses? What if prices unwind faster than expected due to this economic slowdown? What if we see a massive wave of selling because of rising mortgage rates, easing of QE? What happens when all of a sudden we start seeing this big wave of selling in this economy that we're seeing inflation soar, people not working, and an economy where people are working paycheck to paycheck or living paycheck to paycheck, where people are overextended? Let me know your thoughts, because I believe at some point we're going to see this real estate market unwind and we're going to see a massive wave of sellers. Question is, where are the buyers going to be? Yeah, a lot of institutional money will probably come in and scoop up a lot of these homes, but they can't buy them all, ladies and gentlemen. And if the average American isn't working, if the average American is getting wiped out by inflation and cannot bring home enough money to feed his family or her family, we got big problems. Again, as I leave you today, markets at all-time highs. People on the television are telling us how great everything is. Hey, maybe it is great. Maybe it's doing really, really great. Maybe I'm wrong. That's possible. But me personally, I don't think I'm wrong. And personally, I'm going to continue preparing for what I know is coming. And everyone out there has got to do what he or she thinks is the right thing to do right now. If you believe that the financial institution is safe, sound, if you believe the dollar is safe and sound, if you believe these markets are going to go up for eternity, if you believe there's going to be no massive crash, correction, if you believe that your home prices are going to continue to soar for the next 3 years, 4 years, 5 years, then, keep gambling. Me personally, I know all this is on borrowed time, and I also know that the big sales are coming. Look, a lot of people tell me that I missed out. I missed out in the real estate market. I missed out in the stock market. I don't think so. I think the sales are coming, and I think the sales are going to be huge. I think we're going to see big sales, and we're going to see the real true valuations of assets such as stocks and real estate in the very near future. I see nothing but a massive bubble that is getting ready to burst. And when it does, it is going to be tragic with what we're going to see. And people are going to be completely, the masses, completely unprepared because they've been fooled, they've been bamboozled, they've been drunk on this market euphoria, whether it's in stocks or real estate. I've seen this movie before, ladies and gentlemen. It reminds me of .com, reminds me of 2008 in the housing market, except this one is going to be much worse. God bless you all. Make sure you're preparing. I'll talk with all of you very, very soon.